want to introduce everyone to Perry Shields. Perry and I have been working together as we both have a passion for helping the court reporting community. Perry's a California licensed CPA and has really formed his practice on specializing in helping court reporters. He offers a one-stop solution for bookkeeping, tax compliance, and business advisory so that his clients can focus on their work. With over 10 years of tax experience and a background as a freelance musician, Perry understands the unique challenges of being self-employed. His approach goes beyond compliance. He helps clients maximizing tax savings, increase their tax knowledge, and helps them make confident business decisions. Outside of work, Perry is a classically trained musician, adventures, traveling, proud dad of 3 boys, and his wife is actually currently studying stenography. So just deepens his connection on this community and helping court reporters and focusing on helping this industry. Perry, welcome to the Facebook group.
Thanks for having me.
To this week's live webinar.
Yeah.
Today, really, I just wanted to be an open forum for everyone to be able to ask their questions and just get as much knowledge as they can as they come into the tax season. I know things are about to get pretty crazy for you, right?
It is, yeah. It's about to open up the tax filing season for us. And once that's live, we can literally just start filing tax returns. I know we're still waiting on 1099s to come out. If you're a W-2 employee, you're still waiting on that. But for some of those that, if you have an S Corp or some of the partnerships, we're not waiting on those forms to be released. Yeah, we can actually get those returns filed soon.
Awesome.
Yeah.
As we wait for some questions to come in, I did have some. I posted a post yesterday just to see if we can get some questions already stirred up so we can start with those.
Yeah.
But as people are joining this group, feel free to post their questions and we'll get them answered in the comments as well. I had a couple from Rebecca in our group. The first one was asking about the difference between quarterly filing and filing once a year. She said, I'm trying to explain this to my non-court reporter husband, and she's also a new court reporter herself. So she wanted to make sure she had a good understanding about that.
So when we talk about quarterly filings, there's 2 things that we're potentially talking about here. We're either talking about payroll, which those are quarterly filings, or we're talking about estimated tax payments. And technically, estimated tax payments are not considered a tax filing. It's literally just a payment to the IRS. So if she's just operates as a sole proprietor with the Schedule C, the quarterly filings would be your estimated tax payments. And if you were an S Corp and you're running payroll for your owner's salary, the quarterly payroll returns would be filed. But normally, if you use Gusto, files those for you. Generally speaking, you don't have to do anything with those. You just allows your payroll provider to do that for you. Backtracking about estimated tax payments, because they are not an actual tax filing, there really is nothing to file, right? Your CPA may provide you with what we call vouchers. They're a form that you can cut off, you can mail in with the check. The IRS doesn't like checks these days. They're actually getting away from it. Actually, starting last year, it started at the end of last year, but will ramp up a lot for this year. If you are getting a refund, be prepared to provide your banking information to your CPA, because all refunds need to be issued through direct deposit. Anyways, sidetrack. But the quarterly payments that you do file are estimated tax payments that go towards your eventual tax liability at the end of the year. You can do those through the mailing the check or file them online. But again, it's not a technical filing. It's just an estimated tax payment.
Gotcha. Okay. And a follow-up to that, one thing that I've seen more commonly lately is actually doing larger withholdings if you are an S Corp from your payroll. So I've seen people doing all the way to where they get $0 in their actual paycheck from the payroll and the W-2 that they're paying themselves as an S Corp. What are the pros and cons of that? Is that okay to do that and then not do quarterly taxes, or are you still doing both? I guess talk a little bit more about that.
So quarterly quarterly estimated tax payments are not actually required. And so I just want to clarify one additional point is that the only requirement for quarterly tax payments is if you want to avoid underpayment, penalty, and interest. That's it. So the IRS just says if you want to avoid underpayment, penalties, and interest, you have to make quarterly tax payments. If you don't care about the penalties and interest on your tax return, you don't have to make those quarterly payments. So it's not a mandated filing or a requirement to make the payments. Now, speaking to the W-2 withholdings, I actually 100% agree on that methodology. And why? Let me explain. For one, through payroll, if you run payroll every 2 weeks, it's a lot easier to manage your withholdings every 2 weeks. If you do your, let's say, your 401k or your retirement contributions through payroll as well, again, you're doing it every 2 weeks. So it's a lot easier for you to come every 2 weeks to come up with, let's say, $2,000 to go towards your federal withholdings, your state withholdings, your retirement contributions, than it is to at the end of the year when we come to you and say, okay, congratulations, you had a great year in business. Now can you fork over 40 grand to your retirement account? And oh yeah, you owe taxes of another 40,000 on the Fed and 10,000 on the state. That's what we're trying to avoid. That's why through payroll, all S Corp owners, I really do recommend increasing withholdings to avoid that. And then just a little additional clarification, the way that withholdings are calculated. So let's say you set your base salary for the year at 60,000. Your withholdings through your payroll company are going to be set as though your income is only 60,000. As an S Corp owner, you have additional income because let's say your business nets 120,000, but you take 60 as payroll. Well, you have an additional $60,000 of income that no withholdings or estimated taxes are being applied to. So that's why doing it through W-2 withholdings, it actually now is going to offset that additional tax from your S Corp sort of thing. So highly recommended. Great plan, a great strategy. I recommend it for my own clients, and I recommend to anyone that's operating as an S Corp.
Yeah, that's good to hear. And for those of you who are S Corps and you're always falling behind on those quarterly taxes and hate saving and dealing with that, or getting hit with a huge tax bill at the end of the year, look at this plan. Set it up so that you have a bunch of your tax withholdings coming from that salary that you're paying yourself, and it'll make your life a lot easier. And if you don't know how to do that, then you can always give Perry a call, and he can help you with that as well. But
and then
that's a go-to.
Just another clarifying point. Some people think that's actually how I pay myself as an S Corp owner. There's two ways of paying yourself, right? Through your W-2 wages and then through distributions. So let's say you set your W-2 to the max where it zeroes out to nothing. Then what you need for your personal expenses to live, you just do it through distributions.
Yeah. And a couple follow-up questions on that. One says, what would you recommend for non-S Corps? I started late in the year, only took about 20 jobs. For sole proprietorship, what do you recommend in that scenario?
At this point in time, today's being January 14th, yes, you have till tomorrow to make a Q4 payment. With only taking 20 jobs, most likely your tax bill is not going to be huge unless those were $10,000 jobs each. But generally speaking, probably your income is going to be low enough to where, excuse me, it's fine. It just report the income on your Schedule C when you file your tax return. It'll be subject to the self-employment tax and the regular tax, and you'll just pay the taxes with the tax return.
Perfect. And another follow-up to that from Jason, or it might be a separate question. If there is non-salary income like renting out or non-salary allowances, but it will likely net zero by the end of the year, are tax payments still advisable?
I'm trying to see if I fully follow
I'm
the
thinking
question.
maybe saying you have rental income, but then maybe you're going to have expenses on that's going to be zero income for the year. If you want to follow up on that.
So if we're talking about, let's say you have a rental property, that's what, if you're talking about rental income, you have a rental property. Generally speaking, most rental properties usually come at a loss because of depreciation. So you'll have, let's say you're renting out your property for $1,000 a month, you have $12,000 of income, and then you have some expenses, but usually depreciation for rental properties takes, excuse me, sorry. Usually depreciation will bring that income down to below zero. So there's no tax on that. Distributions do not affect rental income or rental net income. If you're talking about for a business, an old, excuse me, an old concept for businesses is that you used to rent out your office to yourself. So instead of nowadays we take a home office deduction. Another way they used to do it is you would actually rent your office from yourself and you'd report it as rental income. Sorry, excuse me, Brandon.
Yeah, no
Apology.
problem. And I
Um,
think you were right. I think I was right on Jason's question about, yeah, talking about rental income and it was going to net out zero. And yeah, I think if you're not going to owe a tax bill, you don't need to do quarterly payments just because you had income throughout the year.
yeah,
If at the end, when you go to file your tax return, it's going to be zero income or even at a loss,
yeah,
it's not, oh, I have to still make quarterlies just to follow this rule because they don't know these expenses I'm going to be reporting
yeah,
later.
exactly. Yeah,
It's no
exactly.
big deal. You just don't
Yeah,
have to worry about
no.
quarterlies for that.
And yeah, most rental properties usually come in at a loss.
Yeah. Awesome. And then I know another huge topic, I think anytime I talk with a court reporter, it comes up, is around whether you should be a sole proprietor or be an S Corp. The question from Rebecca was actually about someone starting out. So maybe if you want to think about someone brand new, what should they do? And then depending on how that answer goes, what they should do later on. Is there like a time
Yeah.
where you switch from one to the other?
Ideally, like for example, ideally you want to get to an S corp as usually as fast as possible. But that being said, just get started. Don't focus on the business aspect of what you're doing or the tax consequences of what you're doing. Your focus as a young court reporter is to get out there, get on your machine, and start working. That is your sole focus. Your sole focus is to learn the industry. So the idea is that you want to spend your time focusing on building your business. And yes, that will come with some tax consequences down the road, but that's the goal, right? You don't want to focus, and I can always tell people, don't make business decisions based off of, or don't even make life decisions based off of necessarily tax consequences, right? So when you're just starting out and you're just new to business, don't overcomplicate things by becoming an S corp just to save money if that's really going to throw everything off when you're still trying to learn how to just be a court reporter, right? So that's why I always encourage people just for at the beginning to just keep it simple, right? Just get in there. There's most things I'd recommend, like getting good business habits, like getting a dedicated business account and having all your income come into that account. Developing those habits are more important than setting up an S corp thing. I think that's where you really should start. So yes, the sooner you can move to an S corp, the better. Usually starting around 75 when your net business income is around 75 to $100,000. That's when you can start having the conversation about becoming an S corp because you do have an additional tax filing, right? So you now have to file a S corp tax return, and that's going to cost you X amount. And then it's just additional filing requirements. You should be running payroll. So you might have a Gusto account, which is costing you, let's say $55 a month thing. So there are additional costs associated with operating as an S corp. So yes, if you want to put those off for a couple of years, that's fine.
And just to clarify for those brand new court reporters, it's going to be the net business income. So after you've already taken out the business expenses. So it's not just what you brought in for your business, right? Perry, you're saying after
Yep.
you factor in the business expenses, then what's left over, if that's 75,000, 75 to 100,000 or more, then that's the time to
Yeah.
look at switching.
Yeah, we always talk about what we call net income, and that's when you're netting your gross income against your expenses, sort of thing. So yeah, it's really hard to talk about. We talk about gross receipts. That does factor in a couple things. As far in California, yeah, we have gross receipts fees and LLC fees and stuff like that. But generally speaking, yeah, it's all net income, which is post deductions.
Yeah. And I think you brought up a great point there. When I work with court reporters, it's important that they do put their business owner hat on because I think a lot of them don't want to put their business owner hat on, right? They're
No,
like, they just want to go take the jobs and do the fun stuff that they like in their
yeah,
career. And they don't want to worry about like logging on to QuickBooks or doing all this extra stuff and financial stuff and putting that business hat on. So some of them really wait too long to get that done. But I do think it's a good point. Like, just get started and start bringing in income. And some of these things you just need to learn slowly, one by one.
yeah.
You don't need to like start your business and go straight into having everything perfectly mapped out of the QuickBooks and the S Corp and all this stuff, and then hit the ground running. It's okay to learn these things as you go.
Yeah.
And what is it? Analysis by paralysis. Don't put too much on your plate at once. You got to bring
No.
income in first.
Yeah,
It is a
exactly.
business.
No,
Yeah.
and exactly. You're exactly speaking right. Focus on learning the business of being a court reporter, and then we'll deal with the tax consequences down the road.
Mm-hmm. Awesome. And another question is around LLCs. I know in California specifically, court reporters can't have LLCs, but we do have members that are around the country in this group. I guess what's the difference between an LLC and an S Corp, and why would you form one versus
Yeah.
the other?
Exactly. Yeah, exactly. Brandon was saying that in California, you can't form an LLC. You have to form what's called a professional corporation. And when you do that, you basically you have to file the 2553 with the IRS to make the S election. So you can't you can't have what we call a disregarded entity in California. Now, if you're not in California and you're allowed to operate as an LLC, my advice is usually do it sooner than later. And there's a couple reasons why. For one, you get the protection, right? So you're dealing with lawyers, dealing with a very litigious kind of group already. You need some liability, right? You need some protection. You want to protect your assets. So setting that LLC up is worth it, right? And a lot of states, it's actually pretty affordable to set up an LLC. There's some annual filing requirements. Here in California, we have what's called the Statement of Information that you file. It's an annual thing. And then usually maybe like a $25 fee that you pay every year. It's usually relatively low. Second reason why I highly recommend doing the LLC as soon as possible is because when you file and what most states call the articles of incorporation, that date that you file that's what starts the clock. So let's say you want to become an S Corp down the road. It's all going to be based off that filing of the articles of incorporation. So let's say today, and I encourage people, it's still not too late to file your LLC for this year, right? So it's second week of January, get in, file that article of incorporation. You can do it through LegalZoom, you can do it yourself, or you can contact a lawyer to help you with it. But that starts the date. And then let's say in December, you're like, hey, I had an incredible year. I'd like to be taxed as an S Corp. You can file make your S election then, and then get the whole year activated as an S Corp sort of thing. Or you can do it the next year. Okay, this year wasn't that great. I'll do it next year. So it just allows you to make that decision when you're ready to make that decision.
Mm-hmm. So would you say, because I know you can have an LLC, and then your LLC, you choose how you want to pay your taxes. So you're an LLC that chooses S Corp status. So you're like an S Corp, you're paying S Corp taxes, but you're actually an LLC. If you're outside of California, is that pretty much what you would tell everyone to do?
No, so an LLC is a legal entity, and you do that at the state level. The
Mm-hmm.
IRS doesn't even care about LLCs. They like if you come to them like
Mm-hmm.
I got an LLC, they're like I don't care. So they consider it what they call a disregarded entity. So if you right now went out and formed an LLC and you went to the IRS website and got an EIN for your LLC, you'd fill out say I'm a single member LLC, and let's say you're not planning on being an S corp, then they say, okay, great, we're can call you a disregarded entity. Still can file your business activity on your Schedule C like you have historically. It's not until you actually make that S election with the IRS that you are telling the IRS, hey, instead of being a disregarded entity, I'd like to be an S corp and be taxed as an S corp, sort of thing. So that's why there's some confusion between this. I create an S corp or an LLC. Am I automatically an S corp? The answer is no. There is some additional requirements.
Yeah. And some things I've seen a lot too is court reporters don't set up business accounts that are tied to their LLC. And then it's okay, how does anyone know what is separate? And when they sue you, how do they know what's your personal assets and what's your business assets? So you need a clear line in the sand that like these are the assets you can come after and these are the assets you cannot come after. And so I think that's an important piece as well, is making sure you have, those LLC bank accounts set up and you have that really truly separated. And I see that's not too common. So that's an important piece as well.
It is. I can overstress it that literally the sooner you can get a business, and we say business, it can be just any dedicated account associated with your business. Yes, if you can get that account set up in the name of the business with the EIN, yes, it will help create that separation that'll give you maximum liability protection. It'll protect all your personal assets, and they can only come after the business.
Mhm. Another question for you, and I've actually seen this is becoming more common from Sarah. She says, I live in Maryland, but I work in California. I was planning on starting an LLC, but should I be following the California rules? I'm thinking she's meaning that I can't do
Yeah.
an LLC and I have to go an S Corp route.
So it's funny that okay, California is it's California. I don't know what to tell you. It's a kind of it's a really hard state to deal with. But as a California CPA, I know how to deal with the state and read it. Oddly enough, there actually is an issue right now with some of the large agencies, the national agencies. So if they say you're doing business in California, you need to adhere to California law, right? So California law says as a licensed court reporter, you need to form a professional corporation. And that's what they're trying to say with some of these national firms, is that some of these national firms may not have the correct business structure to be operating in California. So it's actually a really weird thing that's going on. But and so the answer is I don't know exactly, because California is weird about this kind of stuff. And if you live in Maryland, yes, you can go to California and create a professional corporation in California, registered with California and all that kind of stuff, and do it through California. You're absolutely able to do that. Now, you can, in Maryland, let's say you're able to form an LLC, get that LLC, make that selection, get it taxed as a corporation, and then register with the state of California, with the Franchise Tax Board, which is what most people do. And that's because you form your business where you are, and then you register your business maybe where you're with the state where you're located. I would say, generally speaking, that's fine. Because you're not a California resident, I would say operate as a Maryland resident, doing part of your business in California. Actually, one little thing I like to talk about California, and I know this is probably a touchy subject because California has a lot of jobs, the pay rate is usually a bit better, that you're supposed to, if you work in California, you are supposed to file a California tax return as a non-resident, right? Because it's California source income. California just likes their money, and but here's the thing, here's the kicker about that, is that California, it's not what they call these nexus laws, but California's changed it for service providers, is that if you are a corporation, and an S Corp being one of these, it falls into that bucket. If you're an S Corp and your California gross receipts is under 25% of your total gross receipts, you do not actually have to file in California. So something to consider.
Yeah, because I've seen that more and more is you take your jobs in California from around the country and you get the California pay, and your living expenses are probably a lot less than us Californians. So it's smart, but yeah, you're getting hit with California taxes is the only downside there. Oh, awesome. I have one more question for you
Yeah.
around health insurance and how that affects your taxes. I know for me personally, as a business owner, I got to go shop out plans and they're very expensive. I know there's some like deductions that you can get there to help ease the burden a little bit, but if you could just talk a little bit more about that.
Yeah, absolutely. As a self-employed individual, you are allowed to deduct your health insurance premiums, medical, dental, and vision on your tax return as a self-employed deduction. You don't, let's say you're a Schedule C, you don't actually take the deduction on your Schedule C. You take it in one of the, I think it's Schedule 1 or maybe Schedule 2, I can't remember, but it's actually a line item on one of the schedules that you're able to take that deduction. And yeah, it reduces your taxable income and reduces your total tax. The kicker to that, and a lot of people don't miss this one, if you have a spouse that, let's say, has a W-2 job, that they are offered health insurance through their job, but they decline that insurance, the health insurance through that job, you're technically not eligible for the deduction, health insurance deduction. It's just one of these little nuances of the tax law. So just be mindful of that if you have access to employer provided health insurance, that it may affect your health insurance deduction on your personal. S corps are again entitled to the same deduction. S corps handle that a little bit differently. They actually do report it on the S corp return, but they actually report it in two places. You report it on your W-2 wages, and you report it as compensation. So it nets itself out on the S corp return. But when it flows over to your 1040 personal return, it increases your wages, so you pay a little more tax on your gross wages, but you get the same deduction on the schedule that Schedule C filers get.
And just to clarify, if your spouse has a group plan, but you signing up, you wouldn't actually get any benefit, like they're not subsidizing the cost for you. That doesn't matter. It still becomes not deductible for you.
It's not deductible
Yeah.
sort of thing. So
Gotcha.
it's a
Gotcha.
little it can get tricky. And
Yeah.
again, it's month by month. So let's say your spouse had a job for only 2 months, January and February of the year, and then they left, and then you had to get your own insurance, then you get the deduction for the rest of the year. So it literally is only month by month.
Gotcha. Yeah, that makes sense. That makes sense. Hey, if you found this helpful and you want to learn more about tax planning, especially for court reporters, Perry and I are both focused on helping the court reporting industry specifically. So having people in your corner that know all these nuances specific to what's going on in your industry can be extremely helpful. Perry has his own Facebook group like mine, where he posts about the different tax rules and tax changes and tips and tricks that you can take advantage of. Or, of course, you can reach out to Perry and set up a time to talk about your own taxes. We're getting ready for tax season. So I know he's about to get really busy and it's about to get really crazy. If you do have any other questions, you can go to his group and post them there. But Perry, anything else that you wanted to add before we hopped off?
No, we covered a lot of the topics, and if you have any questions, yes, please reach out. I'm happy to help. I really do. I'm really here trying to be a resource for the community and all the court reporters. So please just let me know.
Awesome. All right. Hope everyone has a great rest of your week. And of course, we'll see you all next Wednesday, same time for another webinar.